Good day, everyone, and welcome to the show. Listen, I'm glad to have you guys here. Today is Friday, May 31st, 2019. And you know what? The crisis is starting. It's really starting to get underway now. And it's a recession, but it's going to, I think, be bigger. Let's get started. Let's open up the charts right here, and let's take a look at the silver price today. $14.51 per ounce. Now, when this crisis really gets underway, a little bit later stages of the crisis, the prices of gold and silver are going to explode. But it has to be on the side of the crisis where the Fed actually reacts to the crisis. That's what's going to make the price of silver and gold explode. They're being forced into a corner. There's two directions that they can go. One direction is they can allow the economy to fail and not do nothing. They'll never go that direction. The other direction is to try to re-stimulate the economy and re-inflate these asset price bubbles. That's the direction they're going to go in, because that's the direction of least resistance. That's the direction where they can actually do something. You know, everybody, nobody just stands there and watches a house burn down. They always do something. And that's the way with the Fed. The Fed only has one tool, so they're going to use that tool. And that's where we're going to see silver prices explode, gold prices explode, cryptocurrency explode, everything except the dollar at that point in time. Because they're going to be in high print mode. I've called this for years. I've been predicting this event's coming for years. I call it the Great Print. That's what I call it. And that's what's coming. Let's take a look now at cryptocurrency today. 84.10. She's taken a little drop off from her highs. But it's still within the bull market. And it hasn't dropped that far where it's just not a little price correction within a larger bull. You know, you can see this bull started. It started back here. Let me see. Let me try to get a date here. Where's my dates? Anyway, that's where the bull started, right in there, and it's been going up ever since. You know. Let's take a look at cryptocurrency market capitalizations today. $266 billion, with a Bitcoin dominance 56%. And we see all of the coins have basically had this little correction, and they're all starting to get ready to start picking back up again, I think, pretty soon. Let's take a look now at the Dow Jones. Now, this is the big story of the day. The Dow Jones is finally dawning on them what's happening with the trade wars. It's finally dawning on them. We're down 317 points on the day, and I'm going to tell you what, I don't think it's going to go too much below this last price correction in the market was 21,792. We're at 24,856 right now. I don't think they're going to let it go too much below that mark before they change monetary policy. See, they never really changed monetary policy. That was all just talk. That buoyed the markets last time was talk. That jawboning, that talking is not going to work again this time. They're going to need to actually change monetary policy. It's that change of monetary policy that's going to shift gold, silver, and cryptos and going to hurt the dollar. That's why they tried to get away with just talk last time, and it worked. This time it's going to take more than talk. It's going to take action. Let's take a look at oil. Oil's down $1.65, 2.92% on the day. This is indicative. Oil price falling is indicative of what's going on in the markets right now, including the Dow Jones. This Dow Jones, they're finally reacting to the problems in the world. Huge problems we have in the world. Let's take a look now at U.S. Treasuries. And we see yields falling again. Look at that. U.S. 30 years down to 2.6. 5.2 basis points. We're seeing 6 basis points, 7 basis points in the 3-year Can you imagine? Almost 8 basis points today alone. This is absolutely terrifying what's happening. We're moving into this recession a lot quicker than people think. An awful lot of these analysts out there say, oh, we'll be in a recession by 2021. They were saying 2024. Then they said 2021. Now some of them are saying 2020. They're all off base. This recession's coming a lot sooner than any of them expect. One of the things that's driving us into this recession is this trade war. It's driving us into it much faster than we'd normally go. If we hadn't had the trade war, it would have taken a lot longer. It would have taken until 2020 or 2021 or something. But with this trade war, man, this is really pushing us down the hill fast. Let's take a look now at the dollar index. 97.99. So we see the dollar index drop below 98 today. 97.99 on the U.S. dollar index. So we see a little, dollar's falling a little bit. But you know, I don't expect the dollar to fall a lot until they change monetary policy. Right now, they're still extracting $50 billion a month from the general economy. This is called quantitative tightening. They haven't ended it. I think they plan on ending it in September, if I remember right. They're not going to make it till September. They're not going to be able to continue extracting $50 billion a month from the economy. This is what's been supporting the dollar. And you know what? You would think with them extracting $50 billion a month from the economy, you'd think that the dollar would be going on a moonshot. 110, 120 on the U.S. dollar index. No, it's been staying around 97, 98. This is indicative of dollar weakness. The fact that they're withdrawing liquidity, the fact that they still haven't ended their cycle of rate hikes, which supports the dollar either. They haven't lowered rates yet. Not any. They're still, in fact, they're still trying to look for an opportunity to get in there with another rate hike. If they could get away with it, they're not going to get away with it. The market is dictating that they're not going to get away with it. Look at the market down 304 points today, you know. And, you know, if we go back to a longer-term chart here, let's go back to the max chart. And you know what I see on this max chart? Let me pull back here, you know. What I see is a market that's made a triple peak and now is rolling over. Made triple peaks and she's rolling over. And I mean, she could roll over huge, you know. And here's the thing. If the Fed steps in, if the market starts to really roll over hard and fast, you know. I mean, serious, dropping 1,000 points a day sort of thing. And everybody gets really scared. I mean, really scared. The market's rolling over big. And that's the final indicator that our economy is going down the toilet hole. Everybody really gets scared. They all start to rush into safe haven assets. You know what happens then? Is the Fed will come out and they will go back to their loose, easy monetary policy. But, you know, the market's not going to react immediately. The market will start to react. They'll slow down the fall, but it generally takes a couple months before the market actually starts to bottom out and starts to come back again after they react, after the Fed reacts. There's a little bit of a delayed reaction there to the markets. We saw the same thing back in 2008 during the great financial crisis when the Fed actually came in and they changed monetary policy. And they went into doing quantitative easing. I think it was quantitative easing 1, and then I think it was Operation Twist after quantitative. I think it was after quantitative easing 1, if I remember correctly. Anyway, they came in with quantitative easing. The markets do not respond the same day. Well, they do a little bit, but not like they do over a period. As that money starts to filtrate itself back into the system again. It takes a little while for that money to filter down into the system again. And as that money starts to filter into the system, then the markets start to respond later. You know? And this is exactly the same thing that happened when they quit quantitative easing. And they went and started tightening. the markets didn't respond right away to the tightening. It's taken a little while for the liquidity to drain out of the system. And now we're getting to the point now where if this was a patient, you know, if it was somebody that come into the hospital and they look all bleached because they got internal bleeding, that's what the system has. The Fed is the internal bleeding. They're sucking all of the liquidity out of the system like some sort of a parasite, like a parasitic worm or something. You know, and then they'll try to fix it by pumping money back in, but there's always like a little delay there. You know, listen, thank you guys for listening to this report. Just remember, the crisis is beginning. It's beginning. It's really starting to begin in earnest. And it might pick up steam very soon. We know what to expect. And listen, thank you guys for listening. Like and subscribe. Give me a thumbs up. And we'll catch you guys in the next video. Bye-bye for now.